Party City. For decades, the name alone conjured images of colorful balloons, wacky costumes, and everything needed to celebrate life's big moments. Founded in 1986, Party City quickly rose to prominence, becoming a dominant force in the party supply market. Its aisles were a treasure trove for birthday parties, Halloween celebrations, and everything in between. The company's bright and cheerful stores became synonymous with fun, offering a one-stop shop for all things festive. Party City's success was undeniable, but behind the confetti and streamers, a storm was brewing. The once thriving retailer began facing a series of challenges that would ultimately lead to its downfall. The party, it seemed, was coming to an end. Party City's decline was a slow burn, marked by mounting debt and changing market dynamics. The company's business model, once a strength, became a liability as consumers increasingly turned to online retailers and discount giants for their party needs. The writing was on the wall, but many remained hopeful that Party City could adapt and survive. Unfortunately, the challenges proved too great, and the iconic retailer was forced to make the difficult decision to close its doors for good. The closure of Party City marks the end of an era, not just for the company itself, but for the retail landscape as a whole. It serves as a stark reminder of the challenges faced by brick-and-mortar stores in the age of online shopping and evolving consumer habits. While Party City's reign may be over, the memories it created and the joy it brought to countless celebrations will not be forgotten. Party City's financial woes began long before its ultimate demise. The company had been grappling with a heavy debt load for years, a result of an ambitious expansion strategy and several leveraged buyouts. In 2019, the weight of its financial burdens became too much to bear, and Party City filed for bankruptcy. The company entered Chapter 11 protection, hoping to restructure its debt and emerge a leaner, more sustainable business. The bankruptcy filing sent shockwaves through the retail industry, highlighting the precarious position of many traditional retailers. Party City's debt, a staggering $1.7 billion, stifled its ability to invest and compete effectively. While the bankruptcy provided temporary relief, it did little to address the underlying issues. Party City emerged from bankruptcy with a slimmer debt load, but was still burdened with over $800 million in debt. This heavy financial burden continued to limit its ability to adapt to changing market conditions. The first bankruptcy was a clear warning sign that Party City's problems ran deep. As if a mountain of debt wasn't enough, Party City found itself grappling with a series of operational challenges that further eroded its profitability and market position. One of the most significant blows came in the form of a global helium shortage, which sent the price of the party essential soaring. Helium is crucial for Party City's balloon business, a significant revenue driver for the company. The shortage forced Party City to raise prices on balloons, impacting sales and hurting its bottom line. Adding to its woes, Party City was also hit hard by rising inflation, which pushed up the cost of goods across the board. From costumes and decorations to party favors and tableware, everything became more expensive to produce and source. These increased costs put further pressure on Party City's already thin profit margins, making it increasingly difficult for the company to compete on price with its rivals. To make matters worse, Party City was facing increasing competition from both online and offline retailers. Discount giants like Walmart and Target expanded their party supply sections, offering lower prices and leveraging their existing customer base to chip away at Party City's market share. Meanwhile, online retailers like Amazon and Oriental Trading provided consumers with a wider selection, competitive pricing, and the convenience of shopping from home, further eroding Party City's dominance in the market. Section 4. The pandemic's punch-changing consumer habits and declining demand. Just as Party City was struggling to navigate a perfect storm of operational challenges, the COVID-19 pandemic hit, delivering a devastating blow to the already reeling retailer. Lockdowns and social distancing measures brought the party industry to a grinding halt, as gatherings of all sizes were canceled or postponed indefinitely. With people stuck at home and large celebrations off the table, demand for party supplies plummeted, leaving Party City with a mountain of unsold inventory and a bleak outlook for the future. The pandemic also accelerated existing trends in consumer behavior that were already working against Party City. The shift towards online shopping, already well underway before the pandemic, went into overdrive as consumers sought to avoid crowded stores, and embraced the convenience of e-commerce. Party City, with its limited online presence and reliance on in-store sales, was ill-equipped to compete in this new environment. As the pandemic dragged on, it became clear that the party industry, and Party City in particular, would face a long and difficult road to recovery. Consumer habits had changed, with many people opting for smaller, more intimate gatherings, even after lockdown restrictions were lifted. The days of extravagant parties with hundreds of guests seemed like a distant memory, and Party City's business model, built on the premise of large-scale celebrations, was no longer aligned with the realities of the post-pandemic world.